Welcome, everyone. Today we're diving into an academic explainer where we'll rigorously, but honestly pretty painlessly, cover the foundational principles of accounting, specifically tailored for your legal practice examinations. I'm absolutely thrilled to be guiding you through this material. Now, you might be sitting there wondering, why on earth do I, a future legal practitioner, need to study accounting? Well, the reality is that law firms receive and hold business and trust monies every single day. You're going to be applying these principles constantly. So we're treating this just like a premium university lecture to make sure you truly master this crucial subject, complete with practical legal examples and quick mental quizzes along the way.
I'll be your lecturer today. Looking at our agenda, we're going to hit the exit learning outcomes, define accounting, look at the users of financial information, compare performance versus position, touch on business enterprises and trusts, and then wrap it all up with a revision summary. Let's get right into it.
All right, Section 1, Exit Learning Outcomes. So what's the end goal here? By the time we finish this explainer, you need to confidently discuss the theory of accounting, outline why we even need financial information in the first place, explain its fundamental aim, and understand the characteristics of different business enterprises. Getting this theoretical framework down is absolutely crucial before you start tackling actual trusts and business accounts later on in your studies.
Moving right along to Section 2, Defining Accounting.
Okay, you're definitely going to want to memorize this definition straight from your source material. Accounting is, quote, the language used to communicate financial information in monetary terms to interested parties. Think about it. Just like Latin or French, accounting is basically just a communication tool. Without it, handing over a client's retainer fee would just be a handshake and maybe a chaotic, scribbled note. This language exists to translate the messy, complex, real-world actions of a business into standardized monetary terms that everyone can instantly understand.
Now, how does that translation actually happen? Well, it's a rigorous, step-by-step process as defined by scholars like Deploy and colleagues. It's not just, throwing random numbers on a page. First up is identification. You have to ask yourself, hey, does this client consultation actually count as a financial transaction? Second is classification, deciding exactly what category that transaction falls into. Third, measurement, assigning a hard, concrete monetary value to it. And finally, recording it in a systematic way so the information can be properly analyzed later. If you skip even one of these steps, the whole language completely breaks down.
Which brings us to Section 3, Users of Financial Information.
So we've got all this meticulously recorded data, right? But who actually needs it and why? Well, according to academic experts Adams, DeLonge, and Storm, literally every single institution that receives and pays out money needs this data. They needed to figure out if their financial objectives have actually been achieved. It's the absolute bedrock for decision-making and evaluating economic activities. The data must be reliable, and it's the bookkeeper's fundamental duty to provide it in an orderly manner. But here's the catch. Specific users have wildly different needs when they look at the exact same numbers. Let's break down how this data serves 6 distinct groups. Number 1, management. They use it for internal planning and critical business decisions. 2, investors. They're evaluating the risk before handing over their capital. 3, creditors, like banks, checking to ensure loans can actually be repaid. 4, employees. Honestly, they just want to look at the data to determine how secure their jobs are. 5, the government, because they need to accurately determine tax liability. And side note for law firms, regulatory bodies like the Law Society act as users too during their mandatory trust audits. Finally, number 6, clients. They might want to ensure your firm is stable enough to supply legal services well into the future. 6 totally different groups, all relying heavily on the exact same records.
Okay, Section 4, Performance versus Position.
This right here, it's a massive conceptual dichotomy you have to get. Financial performance indicates whether profits or losses were made during a specific period. Imagine performance is like a video recording. It's capturing the flow of income and expenses over a set duration, like a whole financial year. Financial position, on the other hand, indicates the net worth of the entity at a specific point in time. It's not a video. It's a photograph, a strict snapshot of your assets, liabilities, and equity on one exact date. Let's do a quick quiz to test this. If a senior partner demands to know the firm's exact net worth today, are you showing them performance or position? Position, exactly. Performance is a period. Position is a point in time. Definitely burn that distinction into your memory for your exams.
Moving right along to Section 5, Business Enterprises and Trusts.
As future lawyers, you'll deal with plenty of business structures like sole proprietorships. But you will see trusts constantly. You absolutely have to understand their operational mechanics, which are strictly governed by trust property legislation and common law. There are three main players here. First, the donor, also known as the settlor. This is the person handing over the assets. Second, the trustees. These are the folks legally entrusted to actually manage and use those assets for the business. And third, the beneficiaries. They're the ones who ultimately receive the benefit of the trust. It's a very precise legal separation of ownership, management, and benefit. And guess what? It relies entirely on flawless accounting to function properly.
Almost done. Section 6, Revision Summary. Looking back at our initial targets, huge congratulations on reaching this milestone. You've successfully conquered the foundational theory. You should now confidently grasp the language of accounting and really understand why it's a vital, living mechanism for any functioning business or legal practice. This is a massive step in your academic journey.
Let's do a super quick, rapid-fire recap to actively test your memory on the absolute essence of Unit 1. First, what is accounting? It's the language communicating financial data. Second, who does it serve? It systematically serves 6 key user groups so they can make informed decisions. Third, what's the big distinction in reporting? Performance evaluates a period of time while position measures a specific point in time. And 4, how do trusts operate? Through the distinct legal roles of donors, trustees, and beneficiaries.
As we wrap up this explainer, I want to leave you with a final, slightly provocative thought. We've established that accounting is the language of finance. Ask yourself, if you, as a future legal practitioner, cannot fluently speak the monetary language of your future clients, how could you ever expect to effectively protect their legal and financial interests in a court of law? The truth is, you can't. The numbers always tell the story. Learn to read them, and you will become a truly formidable advocate. Thanks so much for your focus today, and I can't wait to guide you through Unit 2.